Concerns about China still very much front and center for investors. Asia markets lower again today after China's central bank cut its one-year loan prime rate. This was the second time China cut this rate in 3 months, and it comes as the fallout from the country's real estate crisis spreads. Let's get some more insight from Dewardric McNeal, Managing Director and Senior Policy Analyst at Longview Capital. He is also a CNBC contributor. Dewardric, welcome back. Good to have you with us. Did China do too little? Was this kind of a kind of, well, to use the term, sort of a too little, too late?
Thanks for having me, Tyler. Look,
Sure.
I think you hit it on the head. I think this is certainly too little, too late. But I think it's important here, Tyler, for us to take a step back and try and look at what really is going on here. We are witnessing an incredible tension between Xi Jinping and the leadership's desire to continue to reform this economy, move it away from the borrow and build, export-led and infrastructure-led growth into something that's more akin to a high-tech sector development, domestic consumption, and a green economy. But what's happening, Tyler, is the old economy is collapsing around the leadership as they do this. Now, I've been extremely pleased to see how much tolerance Xi Jinping and the leadership has for pain. But Tyler, the question is, do Chinese citizens, the private sector, and most importantly, do foreign investors have that same tolerance for pain? And I suspect not. And so we're going to have to see whether or not Xi Jinping pivots to do something in the short term to buy himself some more time in the long term.
Well, you raise an interesting point in a note that I read, and that is that one of the things that has so far kind of been missing here is any sort of direct fiscal stimulus. In other words, real money that would go to the very Chinese people that you say will determine whether this policy works or not.
Yeah, I think that has been missing. I think a lot of people have been looking for sort of a stimulus blast as well as some support for households. Now, you know, there are people who say, well, that's only a short-term fix. What the economy really needs is to boost confidence. Private sector needs to start hiring again so that people can have jobs. That's a long-term fix. But Tyler, something is going to have to give in the short term. Mm-hmm. And I think that may end up being payments to households so that we can get something going to increase confidence. Because what we have is a crisis of confidence. So credit is not the issue. There's plenty of credit that's cheap. People don't want it, Tyler.
Last hour, Dewardric, Sean Ryan, our guest who's in Shanghai, said there were two things that would make him more bullish on China. Number one, if multinationals started to go in, and I just forgot the second. So let's just start with the multinationals. Do you see signs that they're going to increase their investment? Do you think they'll wait for much better news from China or try to be a little opportunistic?
Well, look, I think there are some people who think that they can play this market on the investor side. On the multinational side, not everything is bad news. We saw reports from Starbucks, from Apple, where they've seen some revenue gains. So this requires you to really be able to pick and choose how you enter this market. No longer can you just expect you enter China, there's great revenue, great growth. You're going to have to be much more methodical about how you engage China these days, particularly in the short term, Kelly.
Right. Travel, he's mentioned, is a bright spot. It looks like that's one part of the economy, electric vehicles. So, you know, if you wanted to be really selective as an investor, I guess you could try to kind of look for those opportunities.
That's correct. But look, I think ultimately here, investors are going to have to make a choice. And that choice is, do we cut losses and run now, or do we stick it out and ride with Xi Jinping, who does have a long-term vision for an economy that's deleveraged, that's less risky? But Kelly, I'm not sure if that pain threshold is something that international investors will be prepared to ride out over the long term. But that's the key question.
Right, right.
All right, Dewardric, thank you very much. We appreciate your time today.